Today we have Mike Littledike, who is the founder of Capita Financial Network, a wealth management firm that focuses on building lasting relationships with individuals, families, and business owners through comprehensive financial planning. Founded in 2008, Capita Financial Network continues to grow and has over $1.4 billion in AUM as of today. Their mission is to create the optimal wealth management experience for its clients. Mike spends most of his time building the company, finding strategic partnerships, and building adventure-packed events for like-minded business owners to synergize together. Sounds pretty fun.
Sounds amazing. Yeah.
Well, thanks for being here, Mike. I'm glad we could do this.
Yeah, no problem. Thanks for having me on. It's really cool what you've been able to do with this podcast. I've listened to a couple of your episodes, and your lineup has been awesome. And I love seeing local individuals like yourself not only build, an amazing business, but the Jimmy Rexes of the world and whatnot. The talent that's here in Utah to be able to hear all these amazing stories here locally. It's kind of fun. Good job.
Thank you. I appreciate that, Mike. It has been really fun. And so Chaz Johnson, shout out to Chaz. He introduced us. And so I'm grateful that he was able to do that so that we could do this.
Yeah.
Well, Mike, the first question I usually ask my guests is just to talk a little bit about your upbringing. So, childhood or teenage years, or if there was anything, with your parents or kind of how you grew up that influenced you to be who you are today, or had an impact. Would love to hear a little bit about that.
Well, first of all, I feel blessed to have the parents that I have and had the way they raised me. I grew up in Camas, Utah, by Park City, for those of you maybe not familiar. Small town. I think I graduated with 100 people in my class. It was a 2A high school. My dad started to work with Mrs. Fields, and then he built his own pizza brand in Camas called Summit Inn Pizza. He bought like a 120-year-old building. It was a bed and breakfast. And so we lived in the pizza place and we lived in the business. So as a kid, I grew up, watching my dad build that business, working with him, making pizzas, watching how he interacted with the folks there locally. And he came, as an outsider into Camas, and he became the good old boy of, Camas. He was on city council and very involved. He drove bus. So like when I wrestled in high school or played football, he was driving the bus. So he was always there, supportive, and really taught me how to treat people. If anyone who knows my dad, he goes by Dan the Pizza Man. He loves pizza. He loves watching people enjoy it. And he just showed me how to treat people, how to treat customers. And, obviously, when you're making thousands of pizzas, not everyone is perfect. And he showed me how to deal with if someone comes in and they have the wrong pizza. Not only do you say you're sorry, you correct it, you give them a free gift card. He went above and beyond to show me how to treat people to build a lasting brand. And I think that pizza place has been there for like 35 years. Wow. And he's just barely expanded here in Pleasant Grove, Lehigh, Bear Lake, Saratoga Springs, I believe. So it's been kind of fun to watch him to build that, and most importantly, see how he treated people along the way. But my parents are amazing. They always supported me and saw, I think, the best in me, and helped me become, I think, who I am today.
It's amazing. Yeah, It sounds like your parents are very influential, and seeing your dad run a business firsthand sounds like inspired you quite a bit. And so it's Village Inn Pizza.
Summit Inn Pizza.
I'm sorry, Summit Inn Pizza.
Yeah.
Okay, Summit Inn Pizza. Well, I'll have to check it out. I'm going to go to Bear Lake in a few weeks. So
it's good pizza. It's funny because when I kind of talked him into doing the one in Lehigh, because I live here in Highland, and so now it's 5 minutes away. So I get pizza probably once a week. I grew up on that stuff.
Yeah.
In fact, I think it's funny because when I was going through high school, I don't know how we made any money, because me and my buddies would just come every day and eat pizza for lunch and whatnot.
Yeah.
And even like if we were going on a wrestling trip, he would drive the bus and then fill the top of, put pizzas in the bus, so that basically we had something to eat on the way, and just took care of that. That's just the way my dad is, just always giving. It's
amazing. Mm-hmm. Yeah, sounds like a great guy. Transitioning from upbringing and kind of teenage years, saw that you spent some time at UVU.
Yep.
So tell us a little about your college experience.
Okay.
And your mindset going into that environment. If it was I want to be an entrepreneur. I'm just kind of biding my time, or I want to get a certain degree and go a certain path. Kind of, how did you think about going to the school?
Well, I literally had no idea what I was doing. My mom was very big into making sure that I was going to go to college. She helped me prep to get, scholarships, and I got good grades with her help, like as far as pushing me and motivating me to do that. Right after, like literally 2 days after I graduated high school, I went to BYU, Hawaii. I think I took like weightlifting, surfing, and outing activities, just went and had a good time there. But went to Hawaii for 3 or 4 months. Then I went on my mission. I went to Washington, D.C., had an amazing mission president who was basically a great mentor for me, as far as I spent a lot of time with him. And I learned a lot about business actually from him by understanding, he was like in his late 50s, serving his mission. And then I realized, the only reason he's here supporting these hundreds of missionaries is because he had the wealth to be able to leave and go do that. So I kind of got into that mindset. So when I came home, I went to UVU, I got into the business program, went through that experience. I didn't, I just kind of checked the box, if that makes sense. But throughout the way, I realized on my mission that I like sales. I like communicating with people. I like the idea of working with people. So I got into lots of different sales positions. I think my first job after my mission was working at the Buckle, selling jeans. And so I'd sit in the back in the women's section. And I think I was like, they keep track of it somehow, but I was like top 2 or 3 salesmen in Buckle. So I was like, okay, I love that idea, which is such a weird thing to even say, but then I started to get into phone sales, and then we did convention sales. We did real estate packages for marketing, or like a marketing package for real estate agents, and I'd go and sell those. So I started to make okay money during that process. And for me, it was more of just trying to find my way and find my path. But even I remember when I didn't have a lot of money at the time, and I remember I had 2 goals. I thought, okay, I want to find my wife, and I want to figure out what I want to do for my career. And I remember actually getting a credit card for each of those things. I had a credit card to take the ladies on dates. And then, because I didn't even have the money to do that, I was like, well, I've got to go do this. I have to be active. So I made that a priority. And then I had a credit card specifically designed to take either business owners, friends, relationships. I would take people and try and build these relationships during lunches. So I book up my lunch every day for weeks and weeks and weeks and just go to lunch with people. And so it's through just getting to know people, and it's quite an interesting story, but there were a couple of pivotal moments where I would meet people who either influenced what I do today or allowed me to get into investing. And so for me, it was all about trying to figure out how to invest. And I made a lot of mistakes early on. Even I remember one of my buddies from college, his dad was doing a hard money loan back in the day when you were getting stupid rates on hard money loans. I was doing it, and I was like, okay, I want some of my friends and family to get involved. And I didn't know what I was doing. And that ended up going bust. And if you remember, back in the day as well, you could even write a check against like an American Express credit card. Mm-hmm. So, but what happened was that money was lost. So I lost my money, and I lost about $80,000 of my friends and family's money as well through that hard money loan. So I literally wrote Amex checks to pay those people back. And this was a week before I got married, and I didn't tell my wife. And so, my fiance at the time. So when we came home from our honeymoon, I'm like, hey, babe, Brittany, by the way, we're broke. We're $85,000 in credit card debt at like 30% interest. And so you think about the dynamics of that, of me not involving her and some of the mistakes I made there. But that lit a fire under me, and that was in 2006. And I literally wrote out a business model for what I wanted Capita to look like. And I did it and got out of credit card debt in like 3 months or something like that, and just built that out through selling, mostly at the time, insurance-based products like life insurance and annuities and things like that. But that was kind of the basis of Capita. But I always wanted it to be a company around relationships, bringing an individual in and being like a one-stop shop, being able to help them with the estate planning. And even though I was making commissions on insurance, I wanted to talk about the wealth management side, the tax side. So I had this idea. I didn't know exactly who was going to be involved to help me fulfill that at the time. So I just kept grinding and going to lunch with people and building, and literally from the backseat of my car would just go meet with moms and pops in their living room and talking to them about their wealth management and gaining clients one by one by one. And then I remember I had this like aha moment. I realized that the people with money, I'm 24, 5, 6 at the time. I realized most of the people with money were in their 60s, with 401ks, IRAs, things like that. And I woke up one morning and I'm like, what do all these people have in common? Well, they need to know about Social Security, but there's no information out there about Social Security. And actually, the deeper I dug, I realized it's pretty complicated. So I decided to become a master on Social Security. And then I would start doing like seminars. I would book out a Marriott or whatever. I'd send out mailers and get like 5 people, at 7:00 at night at a Marriott, and I'd present on Social Security. So I'd use that as an angle to provide value and education for these folks. And that is a complicated subject. And most people did undervalue the benefits of Social Security and how to deal with spousal benefits and survivor benefits and all these things. So I use that as a marketing tool to get my initial clients. Then I took it one step further by then networking with the school districts. Most of the large companies in the state of Utah, like Intermountain Healthcare, ARUP, at the time Questar, these big companies where they would allow me for free basically to come in and educate their employee base. And then we would get a lot of those folks as clients. So I kind of built the company off of educating on something that wasn't being educated on. And there's obviously no money in Social Security advice, but that's what helped me build those relationships with those early clients. And it's just really fun to like think back about the grind of those, early seminars and those early days of me just putting in the crazy hours and finding those first few clients.
Yeah. Well, I think you bring up a really important concept and point there, Mike, is you added value first through education and the Social Security niche without expecting, really not getting anything in return monetarily, at least initially, because there's no money to be made, educating. But you're building those lasting relationships, you're building trust, and that's what pays at the end.
Yeah, and I think it provided a platform to provide that education, but also show that I knew what I was talking about. And I was able to go in with confidence and say, I am someone that can help in this specific area. And so, of course, you don't get everyone to work with you. In fact, I think it was a year ago, I had one of my earliest clients. He was one of my biggest early clients, and we were meeting, and he's like, wait a second, how old are you? I'm like, well, I just turned 40. He's like, wait a second. So how old were you when I gave you all of my money? And I was like, 26. He's like, what was I thinking? And I'm like, I don't know, but it worked. And thank goodness you believed in me. And like that client, the amount of loyalty we have to these early folks is big, because they allowed us the ability to build Capita into what it is today. And Capita has evolved since then because back in the day it was more about insurance sales and commissions. But I knew I wanted to go more the fiduciary route, where I didn't want to feel obligated to have to sell anything. I liked the relationship with the client. I liked them trusting us. So we backed away from that and built the registered investment advisory firm, which is Capita today, where it's fiduciary based, we're fee based. So if we get a client, we can literally advise them on all those things, and we're really only getting paid a flat fee on what we're managing. So that felt a lot better. And that's also what prepped me from going from, the insurance guy who kind of helped with financial planning as well, to actually building that comprehensive wealth management firm, which then allowed me to bring in the talent, because it was the Mike show. It was all about me. I had one assistant at the time, and I was doing everything. And some of my earliest hires weren't just even secretaries and things like that. It was bringing over high-powered wealth managers from places like Goldman Sachs and Fidelity and Creative Planning, and bringing these people over, which was probably one of my favorite successes, was bringing these individuals over and having the money, because I built Capita to kind of be a platform for even me to personally invest, because I love investing. I mean, that's always been my thing. Through the recession, buying all the assets I did, it allowed me the wherewithal to go to one of those individuals and say, hey, I'm going to invest in you. And the first one, it was actually Zach Call. When he came over, it's almost been, I think, 8 or 9 years. He told me what he was making at Fidelity, and I was like, oh my goodness, he's amazing. Like, I want him to be a part of my team. And I backed up and I said, well, wait a second. I invest in lots of deals, like real estate deals or stocks, or I'm buying different things. why not invest in an individual? Not only do you, as a business owner, get a tax deduction on that, but then I'm literally leveraging my abilities. So I took a big leap of faith. I joke with him about it that he was more expensive than my mortgage times like 2 or 3. And it's like, I'm taking on this huge commitment because also if I'm going to bring him away from the safety of Fidelity and come work at Capita, I had to make sure that I performed. So I had all that weight, but that was one of the best decisions I've made. And obviously we've duplicated that since, where for me, it's all about trying to acquire the best talent possible, because that's what makes Capita special, to me at least, is the fact that we've got a deep bench of really high talented advisors. But, I joke, their wives like them to bring home checks and make money and have stability as well. So we've got to go and build, and I have to continue to build to give them upward trajectory so that they'll stay and that they'll want to be part of Capita. And we've even pieced out little bits of equity as we've gone along, and they've written checks to own little parts of Capita so that we're really a team trying to build this overall brand. And it's just been fun.
I love it. That's great. Mm-hmm. I mean, yes, so much that we could dive into there. I think backing up a little bit, you're at UVU, you're kind of doing this networking, you're getting to know a lot of different individuals, you're doing some sales. What was it about financial advisory or, wealth management that caught your eye? Why did you decide to go down that path versus other avenues?
Well, I felt like for me, it was more about, like, I obsessed over the relationships. I really value relationships. And, for me, I wanted to obviously monetize on these beneficial relationships that I had. And I felt like wealth management for me was one of the best things that I could do, because there was a gap between, coming even from where I was, where a lot of financial products are sold. And I wanted to reverse that. And I thought, well, because I was able to be lucky enough to create a little bit of wealth during, in the 2009, 10, 11, 12 through buying good assets during the recession. So the idea was I wanted to flip the table a little bit and say, what if we just invest in the relationships, and then we can provide this really comprehensive value and not get paid a commission, but get paid on the overall relationship. So for me, the financial planning was I love money. I love the way it works. I love real estate. I love stocks. I love investing. I like organizing those things. And I just didn't see anyone else out there that did it the way that I wanted. So I kind of built it for me. And so for me, that's what it was all about. It was just trying to fill that need. And in a boutique way, we've done it really well to compete with the large wirehouses, but to do it toe to toe with an individual, because like these, even if you were to ask any of my advisors, we have, I think 14 or 15 of these guys that have come over from all these different firms. They would be at this big wirehouse. They would have like 900 clients, 600 clients, and they were supposed to service them. So the idea of saying, no, come to Capita, we'll take care of bringing on new clients. Like I love doing that. So I can bring on the new clients. I just need you to take care of them and service them and follow through with, my big mouth, basically. Like I'm going to promise all these things. I need you to actually help me fulfill them. And so that's really what we've done. And so our advisors don't take on more than, 180, 200 clients. So they can actually really get deep with these clients, get to know them. And then as markets change, as interest rates change, we know our clients. So when they call in and ask for advice, we can give them that advice, knowing them, rather than, having to pull up a spreadsheet and figure it out. So that's what that excited me, kind of building that out and then scaling it. Because that's the hard thing. Like there's some wonderful RIAs here in the state. But a lot of times it's, one amazing individual with a huge book. And so for me, I wanted to focus more on enterprise value of building something more sustainable that can help more people. And so, if someone comes into our office with $150,000 to invest, we have the right advisors to help them with that. If they have $50 million from an exit of a sale, we have advisors that can handle that. So we've been able to really help anyone. And that's also what's helped us with these big companies, is they want to know they can send anyone to Capita and we're not going to sell them anything. In fact, there's a lot of folks that come in where we just help them file for their Social Security, figure out which Medicare to take, maybe which pension option they should file for if they're at Intermountain or something like that. So to provide that value is kind of fun, even if we don't make money on it, because it just works out and you get referrals from those people.
That's great. Well, it sounds like you've been very thoughtful and strategic about how you set up Capita, and you're able to cater to many different clients and doing it very, very thoughtfully. So when you started Capita, you mentioned your age, so 24, 25, just out of school, you've got this $80,000 in debt. I mean, when people think about graduating college, a lot of people are like, I should go work for a big, RIA or a big shop and learn the ropes for a few years and then maybe go out on my own. But what was it about, I just want to go do this now. I want to plant my flag and just be an entrepreneur. I mean, how did you have the guts to do that?
Well, I think when I graduated in 2008, so I started Capita in 2008, like literally the day after I graduated.
Yeah.
I had folks in my life saying, go get, the quote unquote real job, because now you've got your degree. And because we were making, very little at that time. So the idea was, okay, go get a real job. Or the appealing thing for me, because I felt like I was pretty good at sales. The whole summer sales thing was really appealing. And, I went to college with Casey Baugh and a lot of those guys. And I really wanted to go do that because I felt like, hey, that'd be pretty cool to go for summer and go make some money. But I was very thoughtful for me, at least, to say, rather than doing that, making that money, I wanted to build something special to me. Not to say those things aren't amazing, but those guys who did that, and you look at like someone like Casey Baugh's career, like what he's been able to accomplish because of that platform. But for me, I just decided I want to focus on just building this business. So it was a grind, but it worked out. It worked out just fine.
Love it. Did you have to get licensed? I mean, when I'm just thinking about selling insurance. Like if I'm a 24-year-old graduated from BYU or UVU, and I want to start selling insurance, like what steps did you have to take to get into the industry? The
barrier to entry for that, at least at the time, was very low. In fact, not only did I got my life insurance license, I think at UVU they offered a real estate class. So I took the real estate class and got my real estate license over, did that. And I think over like Christmas break, I did the online course for doing mortgages as well. So I was like, I got my mortgage license. So getting the licenses for those things are actually, at least back in the day, they weren't that hard to accomplish those. So you had to get those licenses, and then you could make commissions basically for either offering a mortgage or selling life insurance. But I really just focus on the life insurance and annuity route. So the barrier to entry is actually pretty low, and that's where I saw a need for maybe making it more sophisticated. And then it was later down the road where I got my 65 license, which is basically the financial advisory license that allows you to pay for people to pay you to give advice. And so like all of our advisors, that have come from other like large wirehouses, they had a bunch of licenses that gave them the ability to sell and get commissions for, on the broker dealer side or things like that. We actually have them get rid of those licenses now. And it's really the 65 is what they need. And then we also kind of make them get the certified financial planner licenses or the designation as well.
Got it.
So all of our guys are CFPs and 65 licensed, but they're not selling mortgages. They're not selling these other things. They're really just focusing on that advice.
Yeah, got it. Mm-hmm. You mentioned, Mike, a couple of times that you had made, so you started in 2008 and you made some good investments during the recession that helped you, sounds like, with personally and with the growth of the company. We'd love to hear a little bit about that, what you did during that time.
There's a myriad, and there's a lot of things a lot of mistakes I made. I feel like I probably lost more in the early days than I made. But as I went through that process, I also learned like it's okay to lose money as long as you think of it as a tuition and you realize, okay, what did I learn from that? What can I do better next time? And I also learned early on my money and clients' money, those are different. Like when I had some friends and family do that hard money loan and they lost it, I was like, that was, for me, I didn't like the idea of that. So I always went the more conservative route. That's why I liked life insurance early on is I was like, well, if they put the money into an annuity, they'll get 4 or 5%. That's guaranteed. I like that concept versus, doing all these other crazy things. So I was doing kind of the crazy things with my own money. But I had some really cool wins. I bought a lot of real estate. I live in a neighborhood called Country French Estates in Highland, and you literally couldn't give away lots back then. That's when even like Alpine Country Club memberships were free, if you remember. Like it was insane. Like they were giving them away. So I was able to get a couple of those lots. I bought some stuff there. I was able to build my dream home there because of those. I remember I sold Genworth Life Insurance. Like that was one of the companies I sold, and their stock went from like, I don't know the exact numbers. It went from like $30 down to like $1 a share during the recession. And so I was like, okay, I could buy the stock or I'll just buy a leap on an option. So I bought like a 2-year option on that. I was able to put, at the time it was a lot of money into that option. And I think I sold it at like $19 a share, but it was an option. So it was a lot of money. So that was enough money for me to build my house. That was enough for me to start doing some private deals. I've done deals with Chaz Johnson, for example, like their Thrive building. I love to throw out seeds, but the majority of what I focus on is really that TD Ameritrader, that Charles Schwab platform, like understanding how stocks work, understanding what a diversified portfolio looks like. So for me, it's like, I'll take some big hits, like I'll take some big swings, but I've always tried to have the stability of that Schwab account as my backbone. And then as people approach me for real estate deals or whatever, I love to just throw out little seeds. And it's been kind of fun to see those, 30, 40, 50 deals that I've done start to actually pay out. And of course, we call them tax deductions, right? When they don't go, when they don't go well. Yeah. But for me, it's just, I love investing, and probably more so than anything. I think I just heard you had, Andrew Smith on the podcast, and he's actually, he probably wouldn't know this, but he's been influential for me as well. We've networked a little bit over the years and done some things together, but like we just went to the F1 race together last year. But I remember we were at some networking event. I was with my wife, and obviously he owned Neaters at the time, and somehow it came up, and I can't remember how it came up, but something about, oh yeah, we went through the drive-through a month ago and they forgot our brownies or something. I think my wife even mentioned it, and he's like, oh really? Oh, we're so sorry. Literally by the time we get home, our babysitter is there. She's like, hey, some guy in like a Ferrari just pulled up, and he gave you this whole thing of brownies with like a handwritten note saying, hey, sorry, we made a mistake. And I was like, that guy's amazing. Like, that was amazing. He probably doesn't even remember that. But then, fast forward when he was launching the Savory Fund, I'm literally in my basement. We're texting about something. He's like, hey, I'm doing this fund. Here's what we're doing. Do you want to put some money in? And like, literally, I was like, because of that relationship I had with him and because of who he was, I was like, yeah, so wired $1 million the next day or whatever. So like, that's kind of how I've been with my own money, is I love building relationships with people I trust. And not to say that deals don't go bad, but if you've built that trust and that relationship with that individual, you just want to know that they're going to fight for you when things go bad, because they do. Sometimes deals go bad, but I want to know that who I'm investing with, they're going to work as hard for my money as I do. So I can give you stories upon stories of deals that I've done like that, where some of the best deals I've done are just me really liking that individual. Of course, you're going to do a little bit of due diligence on the deal, but I've learned investing in people is probably more important than anything. And you know that as well as anybody.
I love that story, and having the conversation I had with Andrew, it sounds like something that he would do. And to your point, the relationships, the trust, all of that is so important when it comes to investing. And you mentioned it. When it's someone else's money, it's for us as a real estate investment company, it's like, you get there's anxiety, there's nervousness. Like, I am taking people that trust me, and I'm putting their money into this opportunity, and my money's going in with them. But it's like, their money is so much more important than what happens to my dollar. It's just, it's a completely different mindset.
And things happen. Interest rates change. I mean, there's so much that can happen throughout the process of a deal where, for me, it's like, I just want to know that you care, and I want to know that you're not going to go and hide and run off somewhere, and we've seen those types of things happen. But for me, and I think it's hard, anyone that's younger that's listening to this, it's a lot of times, because I remember feeling that grind and that pressure of needing to make money to support my family. And sometimes I think people allow money to trump relationships. And even if they're not doing it on purpose, they'll do it subconsciously, where they'll push the lines, they'll push the gray lines in order to get the deal done. And I think that's something that I learned back, like I said, from my dad, with how he dealt with the pizza place, and an example like Andrew there or whatever, where relationships are everything. And so I've tried my best. I'm not perfect. I'm sure I've made plenty of mistakes, but I always try and think about relationships way before money. And then the money, for me, it's always flowed. It's always worked out. Not every deal has worked out, but every relationship hopefully has, where even if it doesn't work, you still are like, I like that guy. You can see him at a baseball game or whatever, and be able to look him in the eyes and be like, how are you doing? So I think that's what it's all about, especially in Utah. It's a pretty close knit, ecosystem here. So I think just remembering that relationships trump everything. Never let money get in the way of a relationship. So.
Yep. Love it. That's great, Mike. So I wanted to talk a little bit about maybe like a case study just from a financial planning standpoint, and whatever you can or can't talk about, but just thinking about, you hear a lot of financial advice, like, 401k, be very consistent, max out your 401k, open an IRA, your health savings account.
Yeah.
And that's kind of like the traditional path. But then you have a lot of my buddies, entrepreneurs, summer sales guys, people who are just maybe making more money. They're not doing any of that. It's more just like, I'm going to go make a ton of money and, maybe buy some real estate or, just figure it out. So I don't like when you think about, and maybe just like hypothetically, like a upper 20s, lower 30s, someone who's maybe in the grind trying to set themselves up. Like what advice maybe would you have, just kind of high level?
Well, I think we could spend, an hour just talking about this subject. Right. And this is why I think getting individualized advice is so important.
Yeah, that's true.
And why I love
to blanket it.
Yeah. And I love the fact that, like, I think myself and our advisory team at work, I mean, we live it. Like we live and breathe what we are advising our clients to do, but everyone's different. I mean, I've had folks who have been a nurse at Intermountain Healthcare for 35 years, and they've had an amazing retirement. Why? Because they systematically, behind the scenes, saved 401k, they had a pension, they had Social Security, they had these things that worked. And so I think what's interesting is that will work over time. Now we can talk about lifestyle and different things as well, but the idea of like systematically saving, sometimes with the entrepreneurs, people who make a lot of money, they forget to set the autopilot behind the scenes, and you're never going to become rich with an HSA or with a 401k or with a Roth. But those are things you should be doing systematically and having probably more passively invested. But if you have income, that solves a lot of problems. If you're making $70,000 a year versus $250,000 a year, that solves a lot of problems by making more money. So I would say folks who are younger, rather than, yes, of course, you should probably systematically save into a Roth or things like that, but investing in yourself, like even with myself with that stupid credit card that I would, put lunch, go to Cafe Rio or whatever and put lunches on there to simply meet with people. I was more investing in getting to know people. And you think about your platform here of doing this podcast, you're getting all this great information from these amazing people, but gaining information from people, figuring out your skill set and figuring out how to make more money. Because if you can make more money, that solves a lot of problems. And so I would say, because I'm not like a great example of a good budgeter or anything like that. With me, it's okay, how do I make enough money to make this happen? What skills do I need to make enough money to then make that happen? And so I think that's what it's all about, is trying to figure out, if you want to go the entrepreneur route, figure out your thing. And by making good money as you go and making wise investments and having them systematically happening in the background, that's probably the most important thing. I've seen a lot of folks who built big businesses, they exit, and then they go and invest in the same things only rather than diversifying as well. And that's kind of a whole interesting topic, because they're like, well, I built my business and I got 1,000x return or whatever. And then they maybe say, okay, well, I don't want to do a diversified portfolio. That's boring. It's only X% return. That's not enough for me. And I've seen a lot of those guys burn through their money as well. So, I mean, we could talk, there's so many case studies where I just think you need to step back and, build a plan and be thoughtful about it, but also realize no plan, you can't build a 40-year plan or a 30-year plan. You got to pivot as you go and adjust. And that's, of course, why I like what I do, is because the advice can and will change as time goes on. But for the younger people, I'd say invest in yourself more than anything. But you should always systematically be saving behind the scenes, and don't be afraid to have some stuff passively diversified in the meantime. Like I was mentioning, my Schwab account, I love that account because it's passively, it's invested by professionals, or the folks at our firm that we work with, but I'm not in there day trading. I'm not doing those types of things. But that account has grown very well. But you think about what that's allowed me to do. It allows me to give all my charitable contributions. So I'm really not paying taxes on the growth on that account, because if there's something that's appreciated, like NVIDIA or something that's gone up a lot, I can donate that to my donor advised fund or to a church or whatever, right? And then I can also borrow against that account. And so whenever I buy a large asset or when I do a deal, I'm almost always utilizing that account either through selling something there, but most likely using margin to then leapfrog into, like when I did that deal with Andrew, I just wired the money from my TD account. So it allowed me to have that, but it took some time to build that up. And so I think just having that plan in place is the most important, but people they need to be thoughtful about it.
Yeah. It goes to show the importance and kind of the value that a true financial advisor can bring as a partner in your life and establishing kind of a comprehensive plan. And I don't think people think about that until it's coming to retirement or they're older. Because anyway, I think it's incredibly valuable.
The numbers are staggering. In fact, our good friend over at Intermountain, he was mentioning how low their 401k contribution rate is for their employees, as far as how many employees are actually putting into the 401k and getting a match. And it's interesting because, like, if you're working at a place like that, you need to take advantage of those things. Because I'll tell you a quick story. There was a lady that I met with a couple years ago, sweetest lady you'll ever meet. But she was like the best nurse in the NICU, like of all time. She was like world famous, like everyone loved her. So she's a master at her profession. So she comes in and you could tell she was nervous. She's like, I don't know what I'm doing. I don't know can I even retire? Like, I have no idea what this looks like. She was single. So I was going through her situation. I'm like, well, how much do you have in your T Rowe Price account, your 401k? And she said, I have no idea. I'm like, well, what do you mean you have no idea? She's like, I don't know. I just put it on autopilot and I don't know. Maybe 100,000 is what she guessed. So we spent the time we logged in. She had like $1.3 million.
Wow.
So you think about, like, in context of, like, because she systematically invested at a very young age and did it, she was literally able to, she thought she had to work 5 more years. Between that, her pension and her Social Security, she was done. So it was kind of fun for me to be able to enlighten her, show her that situation and say, you're good to go. And it blew my mind to think that she literally only thought there was $100,000 there. And so there's something to be taught there. Even if you're a high paid executive or an entrepreneur, by starting early and putting money away, it does mean something. It's really important to do that. To start early.
Yeah. Compounding interest, time value money. I mean, and I think that's a really good point. Even if you are clipping, $250,000 a year, open an IRA, just do the automatic things. Like, don't even think about it. HSA, IRA, just max out and do what you can.
But
it'll grow.
Even for me, like we set up our 401k through Capita and whatever, and so I've just maxed those things out. And it was, same thing. I kind of just put that on autopilot. Our guys handle it, and it's been kind of fun to watch. Yeah, it hasn't been the thing that's made me the most money over my career, but that's a pretty sweet account. And I got tax deductions and, of course I did the Roth side, so I get tax-free growth. So there are some really cool things that you can do if you set them up on autopilot. So I would say just make sure you've got a plan. And then when you're going to be, investing in private deals, that's a completely different world. And that's where there's professionals like you to say, hey, I've underwritten this real estate deal. This is a good one. You should do it. And so that's the whole idea. And then people, you throw out seeds, you do little investments here and there, and that's how that works, is diversifying.
Yep. Love it. Well, so Capita right now, since 2008, so you guys have been in operation for 15-ish years or so.
Yep.
You mentioned 1.4 billion under management, which is extremely impressive. So what's the future look like? I mean, you just turned 40. You're still really young.
Old man,
what's the plan? I mean, what do the next 10, 15 years look like for you?
Well, and I've learned, because if you were to have asked me that at 25, I would have had a completely different answer. For me, I've always just enjoyed the journey, and going back to like my base principles of like wanting my family life to look good and be good and to have great relationships there, have great friendships, but then in this networking world, have great relationships and build something special. And so for me, it's, if we can continue to scale what we're doing, and the thing I'm probably most proud about is, within the last 5 years, it's become less about me and more about our company, and the fact that someone can call in and get an amazing financial advisor without me having to be involved. So for me, it's wanting to scale what we're doing and to help the moms and pops of the world that have $250,000 that need help planning their retirement. But, I've been focusing a lot of my time as well on the higher net worth area as well. So for me, it's just scaling what we're already doing. And if I can continue to bring talent over and scale that out, I'd love to be at 10 billion, 20 billion, 30 billion. So for me, there's really not like an end game per se. It's just the pursuit of helping as many people as we can. And actually, like, to be fair, like, what makes me happiest is to think that our couple thousand households that we service, the people with 10, 20, 30 million that we help, that's great. But we're not going to change their lives as much as we, like, the way our company's set up. Like, if someone comes to us with $250,000 or $500,000 and they're 65 years old and they're like, this is it, I'm retiring. Like, the value we provide for those individuals, it's like, it makes me feel really good about what we can do for those, because there's not a market for that. I mean, there are companies out there that would love to take those people, but they generally get pitched products more so than a plan. And so that's been really fun for me to have been able to build it. And so I want to keep doing that. I want to try and help the whole spectrum of folks when it comes to financial planning. Yeah,
that's great. Mm-hmm. Well, it sounds like the sky is the limit for you guys, and it's only on the up and up. So, Mike, you mentioned private deals and kind of what you've done, personally. But yeah, when you look at investing, how do you look at these private deals, and what are you doing personally? Like, when someone brings you a deal, what's attractive to you outside of kind of the Schwab, the Fidelity, mm-hmm. the basic stocks and bonds? How do you look at sizing up a private deal?
It's funny because I probably go more. I go back to the relationship I have with that individual. I mean, I spend not a majority, but a good chunk of my time doing networking events where we'll go golfing, or we'll go, to my ranch in Texas, or we'll go, like, we're doing a spearfishing trip in a month where we're going to take 8 guys and we're just going to go and hang out, and you get to know these people at a different level. And so for me, it's building these relationships, and the deals just come. And being where I'm at, like, I almost get pitched too much where it becomes, you get a little bit of fatigue. But for me, depending on where the markets are at and who I'm talking to, for me, that's what it's all about. Like, even Chaz, when he pitched me on investing in his current Thrive building or whatever, it was just, I had the money at the time. It was a real estate deal, solid. The pro forma looked good. And I'm like, I like that guy. Yeah. Like, I want to work with them. So for me, it was more about, like, working with the individual, and those deals have always worked. So I don't have, like, a thesis on, like, oh, I'm big into tech or real estate or one thing or the other. It's really more based on the opportunity that provides itself. But I make sure I never get in front of my skis when it comes to over investing in any specific area, because I have that Schwab account that is my base. That's like my baby. And if there's money there to do a deal and it makes sense, I'll do it. And so for me, that's what it's, and I don't go too deep into one specific deal that I'm not in control of. So I've been very, very careful about that. Like, I don't want to go too deep on something unless I'm in control.
Makes sense. Mm-hmm. And you mentioned the ranch and your home and some of these other things. So I've always been curious when it comes to buying fun things.
Yeah.
The cars, the house, the ranch and things like that. What is the appropriate time? Because in my mind, I'm like, man, I'm not going to buy this car or this mm-hmm. house until, like, I feel like I'm set for life or whatever. But is there, and even go back to your $80,000, debt. Like, I've heard people say, like, oh, go buy the Tesla now mm-hmm. because it'll motivate you to, like, go grind and, like, pay it off. Like, so I don't know if you have any thoughts about the fun things or when that makes sense.
Well, it's tough because I do say, I like to tell people, be broke on purpose. In other words, be deploying your money. Don't have it, for me as an entrepreneur, it's actually kind of nice when my bank account gets low, because then it motivates me to go, right? That example of the credit card debt is a good example of that. But if you're doing that and buying depreciating assets or cars or things like that you're never going to get anywhere. What I did is I became broke on purpose by buying assets. And so that then motivated me to either pay off the loan for that house or for that real estate deal or whatever. And so I think those luxury items, I waited. I drove an old Acura TL for a long time until I had enough money to where it didn't matter for me to get the Tesla, or when we first built our house. But even for me, I'm lucky enough to have a business where I can kind of combine the two, where, like, my ranch in Texas or our place up at Monument above Eden, I was able to invest in these assets that, over time will go up in value. Yes, they cost money. Yes, there might be negative cash flow on them, but I'm able to multi-purpose them where I can then take potential clients out there, have a once in a lifetime experience with them, and potentially get them also as a client. But then over time, like this ranch in Texas, it's become one of my larger assets on accident because we've built it out and it's become this fun hobby ranch for me to go enjoy. But then the relationships I've built, like that's how I met, for example, Jimmy Rex or some of these other people, where I've met a lot of really interesting people because of that ranch. And so for me, and then now looking back and seeing how valuable it is, like we got an offer on it and I'm like, wait, what? Like, this is insane. So for me, it's like try and buy assets that do appreciate, of course, and be careful with the Teslas and the trucks and the things that go down in value. But for me, there's also like, I like those wins. So don't be afraid to have fun. Like the biggest thing for me was vacationing. As I was trying to build my business, my wife, she loves vacationing. So she's like, we will vacation. Even like this is something that's important to me. So I'm like, okay. So for us, that's like probably one of the most frivolous things we do is we vacation to really amazing places, and we like to do it the right way. Because if I'm going to be away from my company, I want to go enjoy it. So she helped motivate me for that. And that's probably the one thing, like some of the most special moments that we've had have been on these vacations, or taking the kids. We went to Africa last summer, and that's what we've decided to kind of splurge on, because there's no ROI on that trip to Africa, but there's a memory involved. So you've got to also have some wins along the way. And my kids are 11, 9, and 3. It's like, I don't have that much more time with them while they're still, my kids here in the house. So for us, like we've splurged on vacations.
Yeah. Makes if you're going to spend money, I think, memories, experiences is the way to go. And I think the reward system too, like, for us, we're going to be closing on a deal here pretty soon. It's like talking to my business partner. It's like we should do something, even if it's small, like just some reward that's like a mechanism. Like, hey, you've worked really hard. Like, here's something, and just kind of that trigger.
And then on the other side of that, I have folks that have worked their entire career, and they were the millionaire next door kind of philosophy of like save everything, don't enjoy. And then they hit 60, 70 years old, and they have, let's say, $3 or $4 or $5 million that they've saved up. They literally can't spend it. Like psychologically, it's really weird for our advisors to say, hey, now you're at required minimum distribution age. You have to start pulling money out. And they don't even know how to enjoy it. And then they'll just leave it to their kids. And, we know the story there. So I think there's definitely a balance there. But for me, it definitely motivates me to go and have those wins. And I think one of a good example is we bought a place in St. George with one of my friends, and it cost us like $3,000 a month just to run the thing. And so we had it for 12 years, and then we just sold it, I think in January of this year. And I did the math on it, and and that was what I would consider a luxury purchase, because as you know, real estate, in order for it to really work, it's got a cash flow, right? So on purpose, we didn't rent it or anything like that. So it was a luxury item. And 12 years later, we sold it for more than we put into it completely. And I was like, but I look back at my daughter learned how to ride her bike down there, and we had all these amazing family trips. And so all those memories that we had, we used that, what I'll consider a luxury item, that house, but we actually made our money back on it. And so it's kind of fun to think of it like that. And the ranch has been the same way. Our property up above Eden's has been the same thing, where you can buy assets that you can enjoy. And I think you're the same way. We're lucky enough to where we work in businesses that allow us to then maybe even deduct some of the things and truly make it a business event. And so it's kind of, we're lucky that way, I think.
Yeah, I love it. It's a great balance. Talking about relationships, you guys have $1.4 billion under management. I mean, that takes a lot of work to bring clients in, to raise that capital. What advice do you have? So for us, right, Real Estate Group, we're always, similar thing, looking for relationships and forming that trust and trying to raise money for deals. I mean, what advice do you have for either somebody in a wealth management role or a fundraising role to just establish those relationships and try to get, capital in the door for a business or fund?
Well, and our world's a little bit different, simply because of obviously like who you're marketing to, whether they're accredited investors or things like that. But it goes back to building relationships first, following through with your word, but becoming an expert in something. And so you hear the story of people who have raised large amounts of money. They've usually figured out their niche on the marketing side. And for us, it's more broad based, where we have, a couple thousand clients, where we just became really good at providing that duplicatable, systematic approach to wealth planning, so that when someone comes in and they retired, they're like, oh my gosh, I have 5 coworkers that need help as well. So then they refer to us. So it's something that you just have to allow to compound. So I think anyone that's raising money, don't be afraid to have a ton of rejection up front, and just know that your efforts compound. I mean, we hear about compound interest with money, but relationships and business compounding, it's insane what can happen over time. That, I have someone that I tried to get to become a client 10 years ago. They said no, and we send them a birthday card once a year or whatever. And then 10 years later, they come in the door with, and want to become a client. Like that's what I'm talking about. And then if you've done thousands and thousands of no's, 10 years later, you're going to get a lot of those yeses. So I think it's just that grind of like being okay with starting slow and don't overpromise. And the biggest mistake I've seen people make that have tried to raise money is they try and raise too fast before they know what they're doing, and they make a mistake, and then you're done. Right. Yeah. So it's better to go slow and crush a couple projects, I guess, in your world. And then you've got the track record and you're good to go. In our world, it's more about just, because when people invest with us, they're investing with TD Ameritrade or Schwab, right? So they're at a custodian. So yeah, Apple stock could go down or whatever, but the risk of like someone running away with their money is gone with us, because we have the checks and balances in place there. Of course, there's investment risk, but there's not someone, Madoff risk, if you will. So For us, it's like really just educating. During COVID, our advisors worked, 16-hour days, just calling everybody saying, we're good. Like this, you're diversified. Yeah, this is weird what's going on, but that's like, we raised more money during our business doubled during COVID.
Wow.
Because we took the time to call through all of our people, and we raised a lot of cash, and simply because we were proactive. So I'd say just like it's that compounding effect of just the grind of doing what's right, following through with what you say, and the money will always follow.
Yeah. Great advice, Mike. That's spot on from what I've seen as well. Last couple of questions for you. We'll wrap this up. One thing I like to ask my guests is just to talk about maybe some habits that you've formed over the years. I don't know if there's, whether it's goal setting or reading or exercise or just things that you think have been kind of important to your success in business and in life in general. If there's anything you could share there, interesting.
I'm somewhat of I'm a little bit of an outlier, where if I were to teach a class on, I would say you do need to set goals. But for me, I feel like the way my mind works, I wake up and I'm running. And so for me, it's been more about just making sure that scheduling is probably the most important thing that I do. And my calendar is very sacred to me. And so if something's on my calendar, it's going to happen. So I think goal setting is one thing, but the way to make that happen for me is my calendar. So calendaring is very important to me. Something that I learned, 3 or 4 years ago, was not learned per se, but it was a realization of that I do need some help on is making sure that I felt like I was good at building the business, but I wasn't focusing like on the home life as much, like with my wife and my kids and my relationship with my wife. I saw some friends who built amazing companies, got divorced, and the reason was, well, we went different directions. They weren't investing in that. So I had this like aha moment: invest in your marriage and invest in your relationship with your kids like you do your business. So that's actually, like, oddly enough, that wasn't as intuitive as it should have been for me, but I had to like have this aha moment where we even hired some professionals to help say, okay, like, here are the things that Mike needs to do, like on a weekly basis, quarterly. So for me and my wife, we have like a very specific plan for like what we do for our relationship. And that sounds kind of weird, but it's been really fruitful to be able to invest in my marriage and invest in my kids, and to realize like, no success in the business is going to trump if it's going to benefit me if I can't have that figured out. So I would say like my rituals probably more so around like family, my wife, what saying no more often. Trying to think, like, I like to work out a little bit. I love the cold plunge. I'm like addicted to that right now, where like every morning I wake up and I do that. So it's like you could run through a wall after you're done with that thing. Yeah. I love that. So there's certain things, but I kind of ebb and flow, but I'm not your I could be better about setting goals probably and things like that, but I'm always running basically.
Yeah,
I'm always
that.
going.
Yeah, I love that. I think it's the right balance, because I've lately been very, very methodical about like writing goals, like daily scheduling, and almost it's been very helpful, but almost I feel like can be too much. Like, am I spending an hour planning versus an hour executing? I think there's some balance there, middle ground that I need to find.
I will say, backing into my calendar, starting off though, I was like, I need to make X amount per month. So backing into that and realizing, like, if I was just selling life insurance or something at the time, there are activities that allow for that. And so for me, I calendared it. Like, okay, I got my lunches from 9 to 10. So I literally packed my calendar every day with something. So I'm a little bit more loose as far as that when it comes to goal setting now. But I think if you're starting something, you've got to have that planned out. And allow there to be some buffer time. But I'd have like from 9 to 11 cold call CPAs. And like, all right, so it's on my calendar. So that, for me, that worked. And so I think that's just good advice for someone building.
Yeah, one book that I just finished reading is called The 12-Week Year. And it's the whole concept is consolidate. Instead of 12 months, you can get done what you typically get done in 12 months in 12 weeks. Yeah. So each week is equivalent to a month. And so, and Eric McNeil, who I had on here, recommended that book. So it talks about time blocking, putting in buffer time for email, but then deep work. And it's so, I agree. I'm trying to implement a lot of that. Last question, Mike, that I ask all my guests. So when you back up and think about life, we're here on planet Earth. How do you define success? Like, how do you define a life well lived at the end of the day? What does that mean to you?
Well, that's a good question. And I don't know exactly how to answer that, but for me, like personally, I think it's important for you to personally feel success, to fill your cup. I think for me, it's been building and about the journey. I think success is a journey. So the idea of just constantly, trying to work on yourself, but for me, it's business, like the idea of just growing. So success for me is the journey of making sure I feel like I'm accomplishing something day by day, week by week, month by month. And I don't think there'll be like an end for like, oh, okay, that was my success. And then the other thing that gives me a lot of joy is just like the team that I've built. I think we have like 40 employees now. We had a company party in my backyard like a year ago. And I remember sitting back looking at all the people that were there. And I was like, holy cow, these are not only like amazing people, but then seeing their kids run around and to think like we, not just me, but we've built this amazing company that's provided, a life for all these people that have come from high paid jobs at other places. They've chose to leave. They chose to leave there, come work at Capita, and we're feeding, we're helping all these people live. But then each of these people represent 300 clients that they're serving as well. So to me, like that was like an aha moment of like, that's probably the best way of me, saying like what success is for me is to see who you're surrounded with, like who you're with in the journey. I know some wealthy people that they don't have a lot of friends and they don't have people, they've burned bridges and things like that. So for me, it's like, if I can continue to build a successful business, provide value to my clients, but have, my friends as my coworkers and as partners, like that's what it's all about for me. And so that's probably my answer to
Love
that.
It. No, it's great. No better way to end, Mike. Thank you so much for being here and taking the time.
Yeah, thank you.
This has been great.
Okay.
Love it.
Thank you.
Awesome. Thanks for listening to The Chase Hudson Show. If you liked what you heard, please leave me a review and subscribe to this podcast. Reviews really help us to find better guests and to improve the overall quality of the show. If you'd like to connect with me directly or want to learn more about investing in real estate, send me a DM on Instagram at @officialchasehudson. Again, we really appreciate you listening, and we'll talk to you on the next episode.